Good afternoon. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500 and the NASDAQ 100. I'm going to begin today with the S&P 500, and again, I'll start with the cash market, the SPX. My big picture has not changed, and that I still believe that we are involved or tracing out a primary C wave down, and that would have begun off of the 4607 high that we reached on July the 24th. Being that we're in the very beginning of a primary C wave down, that it will consist of 5 waves of intermediate degree. Those will be in the yellow. And then within intermediate wave 1, we're going to have 5 waves of minor degree, and those will be in this orange color and labeled with the Roman numerals. And so far within all of this, within this intermediate wave 1 down, within the first 5 waves down a minor degree, we've completed minor 1 and 2. Now I'm going to stay here for just a moment because I want to take a quick review of our moving averages on the weekly chart. If you follow me during the week, I've been talking a lot about the daily chart and the moving averages on that daily chart and what has happened, particularly when it broke the daily 50. And when that happened, we saw acceleration kick in. On the SPX, on the weekly chart, would have been equivalent to when it broke below the 20, the weekly 20. It provides us with like, uh-oh, that's a sell sign, a sell signal, and we saw some acceleration hit the market. Broke the daily 50, that produces a sell signal. We saw some acceleration. And again, so our next points where we may see acceleration are going to be with the weekly 50 moving average, the 50-period moving average, the EMA, which sits at 42.28. Then I have the 100 SMA, which is at, I got to pull this down just a little bit so I can get it at 41.99. So 42.28 for the 50. Let's say 4200 for the 100 SMA, the simple moving average, and then the 50-period SMA, or the simple moving average, is at 41.42. So those, when they start to break, particularly these upper, the EMA, the 50-period EMA, and then that 100 period, the weekly 100 period simple moving average, could kick this market down as we continue to flow through minute 3 and then minor 3. So those being at hand, and then we have additional, right? What's going to take us below 4,000 is going to be breaking below the 200 period EMA, which sits at 39.96, basically 4,000. Now, eventually, again, we're looking for these levels as this decline continues. And again, I'm not attaching any fundamentals, any economic news, any troubles that are going on around the world that are going to create this. So again, during the week and during earnings and everything else that's going on, we're looking to them to guide us to where the market's going to be over the next 6 months. And I think that what we're missing in here is that we're getting such conflicting signals, hugely conflicting signals. A lot of it from the Fed itself, based on what the Fed started 2023 with, where they are now, and the news that we got last week, which basically, I think with the pause, I think the markets and all the participants were looking for this, oh, good, we're easing. Oh, inflation's under control. Oh, we're winning this battle. And instead, we got a little bit more hawkish. We got a little bit more like, these are stubborn. And so we're going to hold these rates, and we definitely will have another rate rise between now and the end of the year. And we are going to continue to have to raise rates next year, most likely. So again, that just kind of tipped everything over. Now, I know I've said it before, I'll say it again. I think a lot of the models that are being used in the marketplace right now are flawed, and that they're really not consistently being developed to show what is actually happening. What are the differences between an old model that we relied on and what is needed in a new model to be more correctly reflecting the changes that have happened, the changes that are taking place, the changes to the different things that are happening within trading, within the markets, within the banking system, within economic news. So how that all wraps together to produce this number that's telling us about inflation. So is inflation really still accurate now, as accurate as it was 10 years ago, 5 years ago? I think that the answer could be very pulled in both directions, yes or no. But to say that the Fed may not be using the best models to do their projections is gets support, and you can just actually do a Google on it, do a Google search on Fed models and economists in agreement or disagreement. Anyway, so those are what some of the key levels right now coming into next week. Because if they start to get broken, we may see some acceleration. And so to believe that last week that was it, we're not going to get any more now, it's back to the what are we going to focus on? I don't think that's it. I think we have a lot more to go to the downside. All right, so back down on, we have the daily chart now, and basically the same, but when I put these in, we have broken below within this super decline that we had last week. We've broken below the 50s, and then we gapped to break below on the SPX, the 100 SMA. So what we have up next on the daily is the daily EMA, the 200 period EMA at 42.23, and the simple moving average, the 200 period simple moving average at 41.90. Now, I'm going to drop this down quickly to the 4-hour. I'm going to open this up because we want to take a look now inside all of this. On a 4-hour chart, we're already below. We're below all of them. In fact, now they're all beginning to roll over. Right? We have the 4 and the 8 definitely hard pointing down. The 20 pretty hard pointing down. The 50 EMA turning down strongly. The 50 SMA now beginning to turn down strongly and drop and break below the 200 SMA. So now we got the 20 below the 200 EMA. And if we get the other 3, right, the 50s and that 200 SMA and the 100 SMA starting to drop below the 200 EMA, it's going to produce an additional round of negative for the market, because it's telling us that the trend and what the flow is continuing to be to the sell side. Now, I have added many different levels. I'm going to drop down to the hourly chart. So what we already can see all together on the, I'm sorry, let me just start back here on the 4-hour to do that. We're inside that primary wave C down. We're inside intermediate wave 1 down. Within intermediate wave 1 down, we have completed waves, minor waves 1 and 2. We're in the minor 3rd wave down. Within minor wave 3 down, we have 5 waves of minute degree, of which we've completed waves 1 and 2. So we're getting close to maybe finishing minute 3, and that might be starting our week. We'll get down there, finish minute wave 3. Now I will drop this all the way down to the hourly chart so we can see inside. What I've done is I've cleaned up all of the fibs and just basically am leaving on the ones that are pertinent to the balance of the move. In fact, I could take out this one on the minor degree, the 618, but I'm leaving it there because it's likely going to provide resistance should the market decide to turn and go higher, as it getting ready to when we finish up minute wave 3, we're going to be in a minute wave 4. So again, as I've been talking about during the week, what we're really now into, right? The larger structure, intermediate degree. That's the intermediate degree 1. And so what we're doing is we're what they call, or what I've called, nesting 1 and 2, nesting first and second waves. We are inside the minor wave 3. So we've got minor 1 and 2. Then we got minute 1 and 2. And then we even a minuet 1 and 2. So we've subdivided 3 times on our way to fulfill this 3 of 3 of 3 move. So basically, we're getting ready to finish the first sequence inside that 3 of 3 of 3. So the first, the 3, this 3, we're getting ready to finish up this 5th wave. Now, what we've done so far, in my estimation, is minuet waves 1, 2, 3, and 4. Wave 4 was the rally that we caught on Friday. Now, short-lived, but it did contain one last dig at getting up there. And that was nothing more than it was Friday expiration. I talked well in length about that on last Thursday's update on what it could or could not produce. And it did. But you saw them wipe out that rally as quickly as they put it up. So a lot of strange things taking place within the marketplace. But if in doubt, I take it over and I put it on the closing chart. And guess what? That rally is absolutely gone because they took it up and brought it right back down. They took it up to almost 42. Excuse me, 40. Oh, I got to put it back on. See, where did it come in? Took it back. Oh, actually up to almost 43.50. All right. And then the lows at 43.18-ish. So 1, 2, 3, small 4 inside this 5th wave. Was that it? Coming back up BC, they're done, and now we're going to drop. So what I've done in advance of all that is, because we can still use fib extensions, and the fib extension for a 5th wave, regardless of its minor, minute, minuet, we still have that same fib relationship. And that's going to be, and this is now off. I'm putting it up there, and that was wrong. So let me redraw this. Yeah, I'm not sure what happened there. So let me go back out so I can do this on the candlestick. So we're doing this. The first wave is going to be compared to the 5th wave. And as we can see, it has a lot of room. Okay, so wave 5, 0.618 could. Now remember, the first one is equality. Equality is 42.69. Again, this is the cash market. 42.69 is equality. So what is this then? 1, 2, 3, 4, 5, 1 of 5? Or if we get 5 of 5 and it gets all wrapped up there and that holds just before dropping a little bit further, it could. Otherwise, we're really looking for this thing to come down to maybe 42.62, basis the cash, 42.69, basis the cash. And then we have additional. So again, we can't tell. Now, is there going to be this now that the expiration is over from Friday, which we knew was going to be a little bit on the larger side because of all of the adjustments that had to be made and were made, and then the fight to get positioning on where they were actually going to take the expiration out had to get done, and it got done, et cetera, et cetera. So does that mean that we can resume this selling, which is what is still in play, and get down here and finish? Now, here's the important part that I want to share. We are doing a minute 5th wave down to complete the minuet 3rd wave, right? I point to that because that's the minuet degree. So we're looking at this 3rd wave to be completing. It has first support at 42.98. That is not the first most common when we're using the fibs. of comparing wave 5 to wave 1, that one would be equality. That's 42.62. What this here, this is the minor degree. So if I pull this back over, the minor degree, minor 3 would be equal to minor 1 at 42.6950. But that doesn't rhyme with where we are inside of this. So I leave it there because it should provide some form of support. May not be very strong, but I believe there will be some support there. Whether it's just going to be a pause and we complete minute wave 3, and then do a hike in minute wave 4, and then come back down in minute wave 3, then we'll see about what this level looks like. But again, if minute wave 3 comes down below, then this I would be expect to be broken, and that brings us up to here for the minor third. Again, so what am I counting out now? I'm counting out this stair stepping down to finish all of the 1, 2s with 3, and now we're going to get a 4, 5, and that completes the minute. A 4, 5 completes minute wave 3, an additional 4, 5 completes minor wave 3, an additional 4, 5 completes intermediate wave 1. And it is from that point that I think we get another stronger, longer wave 2, an intermediate wave 2. Now, that takes us over into earnings. So you can see how one will fit into the other. And then after that, or even depending on what earnings may show or not show, we still have an intermediate third wave to do. We still have another large portion to kind of get ourselves down. Now, here we are. So we're going to be looking for a low to get us to set up a minute wave 4 rally. And again, I got to wait for this thing to pull in and pull the low in before I can even put any fib retracements for a 4th wave. More than likely, this is still going to be, let me just kind of open this up a little bit. This is still going to be 4th wave of 1 lesser degree, right? If I'm looking for the 4th wave, once we get the 3 in, I'm looking for the 4th wave of a minute degree. It's going to finish up somewhere in the price territory of the 4th wave of 1 lesser degree, and that's right here. So, we're still, by the time we get this thing going, if we're going to drop down to here, I'm going to suspect that these are going to be down. You're going to find that your greatest guide to initially, without the fibs, your greatest guide for rallies or bounces are going to be these moving averages. And often it's going to be right there, the 8 and the 20. Now here's the 20 coming down, right? We're right into that 4th wave. We're already there on the 20 hourly. If it decided to bounce from here, well, we're looking for it to come back up into here. What is that? 43.57-ish. And then boom, go back down again. Why? Minute 3, minute 4, we're going to do the minor. And then we're looking again into here. So these all remain very valid. If we just come down, touch this, and we decide to rally back up, and we get ourselves back up into here or maybe a little bit higher, well, first thing we're going to do is I'm going to go and throw a fib from there to that bottom and show where is 0.382. If it's right here, 0.382 is likely going to be right up in here. So again, these are all to come to be determined. So we still have additional downside to do. These are the additional levels. This just fills in the blank on what the potential could happen within a more robust, small, minute or minuet wave 5. It could get itself going. It could really create a downside slaughter. Now, bring you back to what I talked about on the weekly chart. Let me just go back to the hourly for just a moment. Let's take a peek, right? What do we got? 42.98, 42.69, 42.62. I'm going to go back out to my weekly chart, which we were just at, And what do we have? 42.69. So we're setting ourselves up where we could get down there, and this is at 42.21. It should not come into play just yet. So where would I expect this to come into play as we're working our way lower for the minor wave 3? And that's going to drive us down, right? Here we have minor wave 3. Going back down to that hourly chart. Minor wave 3. Where's it coming in? 42.69. That breaks. Where does that take us? Down to 41.07. Breaks. That's our next level. We will fill in the blanks in terms of what comes in between all of this as the moves happen. These will be removed once that minute 3 is done. These will be taken off. I will put in different ones for the rally, and then additional from minute wave 1 to the top of minute wave 4 to work through minute wave 5. And that's going to fill in a lot of our blanks coming back down. These are just the ones for the minor. Most common, right here, 42.69. Equal, but it's a minor third, so I'm going to be looking for it to be greater than minor wave 1. As always, I talk about this, so I'm going to be looking more closer to here. Well, what's that going to suggest? We're going to start to break that 42.69, and we're going to get that shove just because it's broken that moving average that'll bring us all the way back down into here and here. And again, we'll be referencing back. What's it look like then back out on that weekly chart? Coming off. Well, if it starts breaking down, wow, we're in trouble. Well, no, I don't want to use that word. I'm sorry. The market might seem like it's in trouble because we're just getting wafts of these just walls of selling. Now, we got no idea what's actually going to be contributing to all of this. But we already know that what we're seeing is that, interest rates are still going to go up. We still got this hanging over our head. We got likely one more hike this year. Yep, they gave us a pause, blah, blah, blah. Now what do you want to do? So think that all starts to get factored in, and we're going to be looking at this pretty closely. So that is basically the cash market. So to just revise and just to wrap it up in the cash market, it's going to be the same as I'm going to talk about in the futures market in a second here, but I'm looking for this minuet wave 5 to complete, whether it's going to be here or whether it's going to be down into here, to complete, develop into and create a finish minute wave 3, put in a minute 4th wave, which again, I believe will be coming back to here depending on how deep it gets, but that will be our first target area of where minute 4 should come. If we get down to 42.69, could be almost a 90-point rally back up to the top of wave 4. Hey, nice bounce. And then we get an additional drop in a minute 5th wave. We'll be doing it against the first wave, and we'll have our levels coming off because then we're still going to be working with the minor all in here. What's that going to look like? We'll figure it out. All right, over in the S&P, just in the futures market, it truly is the same. But we had some additional time. So again, it becomes a little bit clearer here that what we did, right? I'm going to move it over to that line. Now we got rid of that. Look at that. 1, 2, 3. And they drove it back below the low at the close, and then brought it up ever so slightly. So that, again, I'm not really sure how they're going to open it. They're going to open it a little bit higher today, maybe 43.66. Maybe they get back to the 4, the 8, which is up at 40.72. And we still have to get Europe and Asia's reaction to what we did in expiration. So I'm not really sure, but I would be looking for 43.40 to possibly complete this minuet wave 5 and the minute wave 3. 43.40 to 43.44. And again, I'm just going to flip over to the daily because now we're going to include the daily. What do we have right here? We have the daily 200 moving average sitting at 43.28. Right? actually 43.30. That's where that 200 sits. That's that marker. So we have 40, 34, and 30. A break there. Now again, we're coming off in the minute, in the minuet wave 5. If minuet wave 5 continues to hold at a higher level, right? If they get this up there and they bring it down and they don't really start to break below there, but we get 43.40, maybe it's low 34. Complete this. It should, and again, this one was wrong. So I need to readjust this. I need to take that off. This is through the 3rd. And now I want to put in, why is that? Oh yeah, this one is correct. So I took off one of them. I'm not sure what that was, but I had another one out there and I didn't like it, so I took it off. So here we have for wave 3, that's this here. And that one, this is the one I wanted to take off. My apologies, folks. Take that off because wave 3 is already done. Now we got 4, now we got the 5, and that's the wave 5 that's going to come in here, cleaner. So we have 42.68 all the way down here, but 43.34. We have 43.30 at 43.40, and that was an extension within wave 3, and I don't see that. So again, now we're looking at that 5th, and it's more like 43.34, and then we have right below that at 43.30, we have the daily 200. So again, same story, same play. Now, again, I can't say that this smaller, let me open this guy up, that this is maybe just a small 4. Maybe we get up to here, we just come down. All we need to do is just get it back below 55. And I'll tell you, you'd be able to put another fib in. If this is 1, 2, 3, 4, whatever that was. And now we're putting in the small 5th. And you're running it and you're going to stick it. It's too hard. There's nowhere to stick it. But I don't know how far. 43.56 is what it needs to get below. Actually, that low is 43.57. Anything below starts to put in the 5 of the 5, possibly. But we have room down to 43.34. And we know the story that it could be minuet, wave 5 is again extending. We had an extension in 1, we had an extension in 3, we could get an extension in 5. We have the extension inside the extension of wave 3, which was clean. But this could just be a more cleaner 1, 2, 3, 4, 5. Here, here. And we got that break at 43.30, and that drives us down to these next levels. 42.95 would come in below, and that would be for the minuet wave 5. Okay, so over in the NASDAQ index, we've basically got the same pattern. We have a lot of gaps, and here we have as well, you know, a couple of notches because the market closed, but the same deal. I can take this all the way out. Let's take it out to the 3, the weekly chart. Same deal. A, B, we're working a primary C wave down. On the weekly chart, we have the weekly 50 at 13,787. That's an EMA. We have the 100 period simple moving average at 13,434. We have the simple moving average on the 50 at, let me just stick that right there, 13,165. We have the 200 EMA, that's at 13,028. And the simple moving average on the 200 is at 12,624. So again, it could really turn into a very dynamic minor third wave. or it could hold itself together, put in the intermediate wave 1, do a wave 2, and then during that intermediate wave 3, we do all the damage. That's the weekly chart. That's the weekly chart. Everything else develops within it, and then one updates the next one up the line. So coming down to the hourly chart, we can, the 4-hour chart, we can open this up. And we can see we got the minor 1, minor 2, minute 1 and 2, minuet 1 and 2. We got the 3 and the 4, same as before. We're coming down in that 5th, very unclear as to how deep this is going to go. But now we've got, again, this 4 is in the wrong place. So this is the one I want to remove. So I don't know why I did that. So because it connects here to here to here. So a little bit different, but not all that much. 100% equality. I know why. Excuse me for that. I'm going to have to go back and change it on the other one because I'm doing minuet level, not minute. I had it right. Please forgive me. It is Sunday afternoon, and I guess I'm not paying my own attention. So got it back the way it should be. Apologize for that. So minute wave 5 is compared to minuet wave 5 is compared to minuet wave 1. Please forgive my confusion. 100%, 14,422. That's most common. We're looking for the development of the 5 waves, and if it all works and it comes down to 14,587 or in this hood, then I would consider it to be also complete. Again, whatever does occur, if it occurs from here or in this area, we're looking for that rally back to the 4th wave of 1 lesser degree, and that's going to be right in here. So that would be, then we're going to go down. We're going to finish minute wave 3. We're going to do a minute wave 4 back up into here, a minute wave 5, which I'm assuming is going to bring us back into here. And that's going to finish minor 3, which I'm believing should come below 14,255 or 54 and be heading closer to 13,400. Now, again, if you go back out to that weekly chart, you're going to see a bunch of those moving averages all bunched up into here. So that as we start to break those, it'll accelerate. We'll be able to fill in different fibs as it occurs. But I don't have my points to connect to yet, so we're going to have to play it out against what we see here. These are just estimates. They're estimating what the potential for the move is. Okay. Over in the NQ, we're reading the same story. I'm going to start here on the 4-hour. Same deal. 1, 2, 1, 2, 1, 2, 3, 4. And now you can see that we did not actually come down and break that low from the 21st. And so that still needs to be taken out. And that is at 14,836. Once that is, then we have the 5th wave moving to a new low below 5. I am kind of anticipating that should take place pretty easily. So again, what we have here is minute 1, 2, 3, 4. We're comparing 5 to 1. And equality comes in at 14,557. 618 comes in at 14,737. Now, what can this? Let's go down to the 30 and just open it up so I can see. All right, so for here is the 4, 1, 2, 3. This is weird, right? How big this is? 1, 2, 1, 2, 3, 4, 5, 3. I don't know. So we're gonna have to let this play out. One to see where it's all going to come in. Here a little bit cleaner, again using my little closing basis. There's the top of 4. 1, 1, 4, 1, 2, 3, 4. So still, bottom line is still looking for an additional low below this one, and that was 36. So below 36, we're looking for an additional low. And rally on a minute degree, and then for minute wave 5. So right now, not sure why, because I think they all have been hit. Gone. Yeah, 1.618 is basically likely to provide a little bit of resistance on the way back up. But it was penetrated, and that's why I took it off to clean up and to keep a clear picture as to where minute wave 3 now would be expected to drop. So I'm going to take that back off. That's why I'm removing them, so that they're not sitting out there just taking up real estate when we can see more clearly. So minute wave 3 has the potential to drop us down to 14,395. They'll get us below 14,400, but just below. Then we get the minute third wave and minute wave 5, and then we're working on the minor degree. Mind you, minor degree 100% is right here, same level. Looking for that to kind of come in and be broken, and then we're moving down to the 1618, which is 13,500. So again, then we're working against those moving averages, et cetera, et cetera. So one could snowball into the next, put our lows in and get us more set up and get this done for that a little bit larger intermediate wave 2. All right, everything moving averages and on the hourly chart, all kind of being, now you can see here on the NASDAQ on the hourly, 200s, the 100, the 50s, the 20, all in alignment to continue to go down. Nothing is threatening to perk and go back up and start busting this thing higher. So I am going to continue to look for some downside, and we'll go from there. I'm going to likely, unless the market really opens up very strangely in Globex this afternoon, I am not really going to be too anxious to jump the gun in an hour and 20 minutes. So if it does, I may let it trade a little bit and then make another quick Elliott wave update. But let this serve as the update also, what would lead us into tomorrow. All right, thank you very much for listening. I will have a great trading day tomorrow. Again, I will be looking in about an hour and 20 minutes to see how this all opens. But the next Elliott wave update will be on Monday, September the 25th.